Did you know that over 60% of people can't handle a 1,000 emergency? Imagine the stress of an unexpected medical bill or car breakdown when unprepared. This is a reality for many, but it doesn't have to be for you. Today, I'll guide you through 7 practical steps to build an emergency fund that protects you from financial surprises and gives you the confidence to face 2025's challenges. These actionable tips can be implemented immediately, regardless of where you are in your financial journey. Financial uncertainty is a reality we all face. Rising living costs and unpredictable job markets make it harder to save. You may feel like you're working hard, but never have enough left over to save, as if you're running on a treadmill with no safety net. Let me share Sarah's story, which may feel familiar. Sarah was doing okay until an unexpected medical bill arrived. Without savings, she turned to credit cards, and high-interest debt quickly piled up, leaving her overwhelmed. But it doesn't have to be this way. Sarah's experience shows that an emergency fund is a necessity, standing between you and financial chaos when life throws curveballs. So why act in 2025? The economic landscape is changing, and being unprepared isn't an option. The steps I'll share today are about thriving through tough times. Building an emergency fund doesn't have to be overwhelming. It's about taking simple, consistent steps that add up over time. We'll explore 7 key strategies to help you secure your financial safety net. First, we'll calculate the right amount for your emergency fund based on your needs. Next, we'll discuss automating your savings for consistency, uncovering hidden expenses draining your resources, and ensuring quick access to your funds during emergencies. Each of these steps is practical and designed to set you up for financial security in 2025. The first step is understanding how much you need in your emergency fund. This isn't a one-size-fits-all number, it's personal. Start by calculating your monthly non-negotiable expenses, like rent, utilities, groceries, and debt repayments. If your total is $3,000 a month, aim for 3 to 6 months of expenses, meaning you'd need between $9,000 and $18,000 as your safety net. If you're in a high-risk situation, like being self-employed, consider saving closer to 9 or 12 months of expenses. Supposing saving this much feels impossible, start small. Even $500 to $1,000 can cover immediate emergencies. This number should reflect your lifestyle and financial responsibilities. Once you have your target, write it down. This fund is strictly for emergencies, not for vacations or impulse purchases. Now that you have a target, how do you save this amount? Automating your savings makes the process effortless. Set up a dedicated savings account for your emergency fund, keeping it separate from everyday spending. Look for a high-yield savings account that offers growth while keeping your funds accessible. Next, set up an automatic transfer from your primary account to your emergency fund. Many banks make this simple. Just choose the amount and frequency. Automation prioritizes saving before spending, creating a system that works in your favor. If your budget feels tight, start small. Automating 10 or 20 weekly can grow into a meaningful amount. There are also apps that round up your purchases and save the difference, adding up over time. The key is consistency. Treat your emergency fund like a bill that must be paid every month. Over time, steady contributions will bring you closer to your target, giving you peace of mind. To accelerate your emergency fund growth, uncover hidden expenses in your spending habit. Review your monthly expenses, breaking them into essential and non-essential categories. Highlight recurring charges and look for patterns. For example, are you subscribed to multiple streaming services you barely use? Cancel the ones you can live without. Small changes like cutting out an extra coffee shop visit can add up quickly. Check your utilities and bills too. Are you overpaying for insurance? Shop around for better deals. Impulse spending is another major culprit. Consider a cooling off period for non-essential purchases. Every dollar counts. By trimming your budget, you can build your safety net faster. Now that you've freed up cash, let's protect its value against inflation. Building an emergency fund is crucial, but inflation can erode its value over time. Ensure your money isn't sitting idle in a regular checking account. Instead, place it in a high-yield savings or money market account to help your money grow while remaining accessible. Periodically reassess your savings target. As living costs rise, the amount you need to cover essential expenses may increase. Adjusting annually ensures your safety net keeps pace with economic changes. Avoid chasing high-risk investments with your emergency fund. This money is for emergencies, so keep it safe and accessible. Building an emergency fund is not just about starting strong, it's about staying consistent. Treat your contributions like any other financial commitment. Automating your savings is the foundation, but regular check-ins are essential. Set a recurring date to review your fund. If you've fallen behind, adjust your plan and commit to catching up. Align your savings goals with your long-term vision for peace of mind. Make saving flexible enough to withstand life's ups and downs. If you face a temporary drop in income, adjust your contributions rather than stopping them entirely. Celebrate milestones to reinforce your commitment. Your emergency fund is only effective if you can access it when needed. Emergencies are unpredictable, and delays can turn small problems into bigger ones. Ensure your funds are secure and readily available. Avoid locking all your savings into accounts with penalties for early withdrawal. Confirm how to access your money. Can you withdraw funds immediately, or is there a waiting period? Choose a financial institution that offers 24/7 online access. Diversify your access points. While keeping most of your fund in one account is convenient, having a portion in cash or an easily accessible local bank can be crucial during emergencies. Stay informed about account policies. Some banks limit withdrawals per month, which could be problematic in a crisis. Understanding these details will save you from surprises. Your emergency fund isn't a set it and forget it tool. As your life evolves, so do your financial needs, requiring regular reevaluation. Assess your current expenses annually and consider changes in income or career stability. If you've transitioned to a higher paying but less stable job, you may want to save more months' worth of expenses. Conversely, if you've secured stable income, 3 months of expenses might suffice. Evaluate your account's performance and accessibility. Are you still earning competitive interest rates? Financial institutions adjust their offerings, so shop around for better options if needed. Reevaluation isn't just about numbers, it's about maintaining discipline. Life milestones can tempt you to deprioritize your emergency fund. Use these moments as reminders to revisit your goals. Consider integrating periodic stress tests. Imagine scenarios like sudden medical expenses or job loss. Would your current fund cover this? Running through these situations can help identify gaps and make proactive adjustments. Building an emergency fund is about creating financial security and control. Every step taken, from setting goals to reassessment, is an investment in peace of mind. A fully funded emergency fund means approaching financial crises with confidence and being prepared for life's uncertainties. This journey symbolizes a shift from reactive to proactive financial habits. By prioritizing planning and discipline, you're not only protecting yourself from emergencies, but also empowering long-term financial growth. Progress may feel slow, but every small, consistent effort compounds into significant results. Don't wait for the perfect moment. Start now with what you have. Evaluating your savings, setting goals, and making small automated deposits are first steps toward financial freedom. Engage with others in this journey. Share your progress, like and subscribe to stay inspired. Your actions today create a ripple effect, motivating others while strengthening your own commitment.